Welcome back. We're getting started a little late for the final hour today. Just finished up a one-day workshop and a masterclass for my waterfall income. We were going strong for the last almost 2 hours. So it was a good class overall, and that adds into. I'm trying to think what we do. We did a workshop. We did a 3-day workshop last week for waterfall income. We did a 1 day today, and overall feedback was great. I just pulled this out here. Presentation of trading directly, most transparent trading methodology that I've ever encountered across all of prosperity. So, I mean, just my job is to properly educate and set expectations. I had a interesting session this morning in daily profit play. I just think that you have to understand risk management if you want to survive these markets. Look, making money when the market's going up every single month, every single month, every single month, making money is pretty easy. Okay. It's when the market does stuff like this that nobody saw coming. I say nobody because some of us saw it coming. I was cautious going into 2025. Well, we had a correction, came down to my 200 moving average. We had another trough. My job is to sit here and go head first in whatever the market's throwing at us and figure out a way to trade through it. So variety of services, strategies, ways to get the job done. Um, I spend a lot of time trading with members every single day. A lot of time spending time every single week trading with members, finding good trades with high reward, low risk. Having a scanner that gives me great trades, protecting my portfolio, and this service here. This is one of my more like I'll call it more advanced because there's a little bit more strategy deployment that I have. I trade anywhere between 5, 10, 15 different strategies with this service. It's kind of my kitchen sink approach, but we finally had a good look at like how effective this strategy is because I can trade whatever I want, look for ways to generate income, and we just closed out 18 winning trades this week. So all in all, between these trades, I can do the rough math here, but I probably made. Well, I guess I can look and see. I don't think I can find a symbol. Ah, fudge. I was looking at the easy way to do it. I can just add up the numbers. I'm going to say close to $2,500. $2,500 on 16 accounts. Oops. 2,500 times 16. So about $40,000 this week on just good old systematic mechanical trading, managing trades, going A to Z. I did a lot of management this week. I was averaging probably 30, 40 trades this week on tweaking, pruning, taking profits, adding new trades. So overall, it was a really active week. I did raise capital. I did talk about it on Monday. I think I said this on Monday during my live sessions. My job this week with the capital is I was down to about 2 million in option buying power, and now it's up to 2.28. So I've got about close to $300,000 in buying power back this week, which to me is good. That's what I wanted to accomplish. I did add some more trades in, so my beta weighted delta unfortunately is a little bit higher. But some of the trades I did take systematically, I really like. I took a trade on Tesla this week. I added some other trades in Project Options Edge. So, all right, Larry, what do we got, man? I've got a 64.55 butterfly, 10 wide. What's it trading for right now, man? I mean, when you got the final 20 minutes of trading, is it trading for profit? And I say that because I thought I had a butterfly pegged dead to rights this week, and it slipped through my fingers on, was that Tuesday or Wednesday? When was this? When was that stupid crap this week? Right here, right? Wasn't it? Um, what day was that? Oh, it was Tuesday. So I thought I was like perfect. I thought I was, but I wasn't. I thought it was perfect on that butterfly at 64.50 on Tuesday. And we spent all day, slowly going higher. And at 3 in the afternoon, I was right at my level. I was up about $200 in profit. And then it slips up against me where it's pretty much a full loss, comes back into my wheelhouse. I'm up another $200 and I didn't freaking take it. And I'm losing that $200 on the way out. So I'm asking you, what? 3,500? Did it really? I saw that silver's up like almost 2% today. So anyway, Larry, I'm asking you, like, how are you doing on your 64.55? How wide are you? Are you 5 wide? You 10 wide? I mean, that's a good pin. I didn't see 64.55 as like the key level today. So, I mean, we had 50, 60, and 70. So if I had a pin price, I'm not in one. You're up, 50 cents. Okay. You tend to trade a little bit bigger. So maybe 50 cents is something, but um, interesting. What'd you take the trade for? I'm hoping you took the trade for like 50 cents or less. It's a butterfly spread. So what'd the trade cost you? So an SPX trade at 50 cents. I'm guessing that you're at least five wide. So if you got 50, if you got five wide or 10 wide, like I'm guessing you went five wide to get a 50-cent debit. Usually a 10 wide is going to be like close to a dollar or two. PCE cooked me today. In what direction? Adrian, were you long? And how'd you get cooked? What'd you do? I mean, we made profit today. 250 late in the day. Got it. Okay. So up 50 cents. Gold hit 3,500. What did gold futures? Yeah, gold futures at 3,500, but spot price gold's 34.46. So gold futures up. It's interesting, man. I still think gold futures has the same type of bar count as gold. The spot price is October 2023. I hate to say it, man. I hate to be like, kind of poo-pooing on gold's run, but gold running hot, unfortunately, probably comes back with a nasty bubble. Not bubble's wrong. A nasty correction. So I hope that a gold trade is more of this. We hit resistance, we pull back again, and maybe some September volatility, maybe gets the dollar to bid, maybe gets the bond market to bid. Gold pulls back to a little bit of these dynamic support levels, and we can establish some really good medium to long term positions on gold. I don't want to see gold run away from us. I'm still long gold. I'm still long GLD. That's been fine. I mean, between SLV, I've got some good amount of shares here. I've mentioned this many times before, but I have CEF, PHYS, GLD, SLV, all in the gold and silver space. So here is CEF is gold and silver. I have 1, 2, 3, 4, 5, 6, 700 shares. GLD, I don't have a bunch of shares, but I have 30, 60, 90, 120, 50, 80, 210, about 217 shares. It's not a lot, but it's also a $300+ ETF that I've owned since like 200 bucks. So it's enough. I mean, I'm up $23,000 on that. On CEF, I'm up around $6,000, and I have more shares of it, but it's just a much cheaper ETF. And then PHYS, which is gold and silver as well. 1, 2, 3, 4, 5, 6, 7. I'm up about 5K on that one. Have a lot of shares. It's up 36%. I'm just going to let it run. Silver, probably one of my bigger positions. A lot more shares in silver. I'm up a lot more money. $54,000 in silver. 2, 5, 8, 14, 17, 18, 23, 25, 8, 33. I've got 3,500 shares of SLV. A little bit more conviction out of those shares. It's way cheaper. Obviously, the spot price of silver is still in the 30s. SLV as an ETF is way cheaper, and I think technically I like the trade better to go up to 50 bucks. So if we go from 36 to 50, I'd be stoked to see SLV hit like high 40s or 50 bucks before I take some profit. So I'm hoping this can continue to run and jump, and that would be good. Okay, but I'm looking at the bar count. Okay, I mean I know that silver has a pretty good case to be long. But I am telling you that dollar, I don't think the dollar is just going to break the new lows without it being a bear trap. This is my opinion, so I could be wrong. But if the dollar comes down to retest this low, I wouldn't be surprised to see the dollar hit the low and then go back up in a risk off trade. If the market's going to pull back in September, we have the market going down. That would be SPX, SPY, Qs, ES, everything going down, right? If the markets go down for a September volatility rally or whatever, markets correct. Heaven forbid they correct for a month, or go sideways for a month. But if we go down, I could see the dollar catching a bid. Okay. I could see DXY going up. I could also see TLT going up. I could see both these being risk off going up as the market were to potentially fall. Okay. Now, to what degree? I don't think the dollar is a perma bull situation at all. I don't think a bond market is a perma bull situation at all. This whole idea of T-bill and chill, I think it's a terrible trade. I think gold is a much better trade. I'd rather have gold in my portfolio and zero bonds. I'd rather have gold and silver in my portfolio and zero bonds. I don't like bonds. I still have TLT. I have a September 30th call at $89, and that would give me about a $24 credit on my diagonal spread. Okay. So I want to get rid of my TLT. I have it in my portfolio. Here's my 65 by 89. If we get up above 89, I'm going to pull in about $2,500 per trade. Okay, about $2,500 per trade. Some like I take that back, anywhere between $1,200 and about $2,400 per trade, and I have this out for like 10 accounts. So I'd be happy making about $30,000 in bonds, and I'm going to get rid of that buy power. I'm going to add that back to my option buying power, and I'm also going to take that profit and I'm going to take that and reallocate it into gold and silver. I still like gold. I still like silver. I'm just going to start selling options at first, not just jumping in and dumping into shares. Not yet. I still think we have a pullback. So that's a long-winded way to say, if I look at gold, yes, the futures market hit 3,500, but gold as an XAU, which is still a spot price. This isn't like, oh, it's lagging, it's only opening bell, closing bell like GLD. No, this is still the spot price. I could see us hitting 3,500, but not going higher. Okay. If the dollar catches a bid, I could see gold going back down again to the same dynamic support. Right now, an interesting pattern on gold is this. That looks like an ascending wedge. This usually is a great bullish pattern. So I just hope that if we break here, we have to stay here to go higher. So if we're going to respect all this resistance, we break above it, retest it, and then the market goes up. I still think this bar count is excessive. So I'm a little cautious to say that gold's breaking to new highs and we're going to go, thrust up to $4,000 an ounce. I think that gold can test highs, but I think it might set up for a fake out, maybe a pullback. We buy lower, we can trough out here, and then we can reestablish a long position on gold. It's been too easy to be long gold and have this huge run for the last 2-3 years, and then nothing's really happening. But it's allowed, central banks to accumulate. It's allowed traders just to sit and think like, well, I can buy gold and nothing's going to go wrong. I think a little shakeout would probably, it'd be good. I kind of want to see it happen. So it's mostly this bar count. This has been a pretty excessive bar count. We're probably creeping up on 500 bars now, which on a 200-day moving average is a lot. That is 480 bars. I mean, we're a month away from crossing 500 bars. I just don't think we go too much higher without having some type of either aggressive rally and then a nasty pullback, or we hit resistance, we pull back first, and then we find support we're looking for. So I still think we can move. It's just I'm long gold. I'm not hating on gold. I just think that we have to have at least more of a range trade or a pullback to some dynamic support levels, and then we can rally again. Give me 1 second. Okay, what else? Silver does look good. Bonds or buns. Yeah, let's take a look at TLT. So, I mean, it's ever since we had our big like basis trade blowout in April. So there's Liberation Day, basis trade blowout, and then it's just been super, super sideways and choppy. I wouldn't put it past the bond markets to either one, continue this chop fest. And if you're, selling premium on bonds, this could be like the greatest year ever. But I think a lot of funds, a lot of smart money are long yields. I think they're long yields. Global yields are rising. Okay. I don't think that our 10-year yields are going to go down that much. Everyone wants them to. Everyone hopes they're going to. The Fed controls the short end of the curve, not the long end of the curve. Okay. Cutting by 25 basis points does probably not make this move that much. Cutting by 25, 50, 75 basis points does not move this much. So I keep saying this, but if we're right here at 4.2 and the Fed's looking at 1.25% of cuts over the next year and a half, take us out to the end of 2026. Where's the Fed funds rate at? Probably down 1.25%. My question is what are the yields going to be doing? Are the yields going down with the Fed cut rates, or are the yields going up with the Fed cut rates. And this is a huge question for the market because if we're going higher, this is probably more of a risk off trade. It may not be that way initially, but if we start breaking 4.5, 4.6, 4.7, you're going to have some big risk models that are showing risk off trading. And it's going to start choking out growth because you cannot refinance at higher yields right now. Everyone has been stretched in a big way. I guess if you have so much gains in the stock market, maybe it offsets it, but I doubt it. The flip side of that is if we go down here, the last time we saw yields really break were when the market was falling apart for a couple of weeks, all throughout April until we bottomed out on the 9th. So this would be more like risk on, but this is just going to be probably the sigh of relief for consumers, right? If borrowing costs truly come down, you're going to see a pickup in mortgage applications. You're going to see a pickup in housing. You're going to see a pickup in maybe auto loans, whatever. But it would be borrowing costs would be going down. You'll probably see a wave of refinancing. I mean, hell, I'll look at refinancing. I closed at a house at 6.6%. And if we're down to, 3.7, I'm going to be looking to see what that 30-year mortgage is. Because if I can save myself 1%, I'm going to shave off tens of thousands of dollars in interest over a 30-year loan. So that 1% to me is like worth a refi. Okay. And, maybe it goes lower, but if I can shave off 1%, I'm in the house for at least 5 years. It pays for itself, right? I'll save that over the course of a loan easy. But my concern is that we don't go lower and people are going to be sitting here like, man, I've been waiting for 2 years, 3 years. Private equity is just mark to market, pushing things out, eliminating volatility. You're just putting lipstick on the pig and trying to sell it to somebody else. And if you can't refinance that debt at a better price or a lower price, I think you're ultimately getting that like $40 trillion debt bubble that, and it's not immediate, but over the next probably couple of years, all those terms come due. And if we're at high yields globally, it's not going to be good. All of our major crises we've seen in the world for the last 50, 60, 70 years have typically all come from major debt restructures. Okay. If the market gets too big, it gets too wild and crazy, debt can ruin a lot of things. Larry, how's your trade doing? 64.53. You got that thing pinned within $1.40. I don't know if you're trying to take it in the close or not, but hopefully you're seeing some nice profit on that thing. Okay. All right. So anyway, that's yields. This is the big question I'm having starting September. What's going to happen to the Fed funds rate when they start cutting in September? Do they cut multiple times? Here's the watch tool. Current, we got about an 80% chance or 87% probability that they're going to cut. Okay, so they cut in September, looking like they're going to cut again in October. Slim. This is interesting, but a potential cut in October and or December. Okay, so we have 1, 2, 3, 4, 5, and this is looking for a sixth. We'll find out. So if these are all 25 basis points cuts, that's anywhere between 1.25% up to 1.5% lower rates on the short end. Okay. This is a bull steepener. So again, it just depends on what the yields do. If long end of the curve goes higher, at some point that is going to be challenging. Okay. But if we and look, we can stay the same. Like the market can be totally fine if this just doesn't do anything. If the Fed starts cutting rates and yields are just kind of staying in here and they don't really break, they don't really go anywhere, then the market can just be the market. It can just do what it needs to do, and we just have like stickier yields. Just like we've had sticky inflation for a couple of years, we can have stickier yields. Okay, but I do think this is a really important thing to watch for the rest of this year to see how the market's going to be taking and pricing maybe the forward guidance on the Fed. Okay, so just keep that in mind. Larry, I'm watching your trade for you, dude. 64, 54, 62. You're within about 50 cents. Got 4 minutes left. I think you got some pretty good profit rolling in if you need that pin. What'd you have that pin at? 55? Hopefully you're grabbing a few bucks and able to get filled. Hopefully able to get filled. 55, yeah. I mean, you're within 30 cents, man. It's looking good. All right, let's take the heat map today. Overall markets were down. We have 4 minutes till the close. S&P down 0.7%. Nasdaq down over 1%. Q's down 1.32. Dow down 0.2. Russell down 0.5. This could be that that bit of a catch-up trade I talked. The market broadening would also equate to S&P and Nasdaq are down a little bit, and the Russell's down less. Maybe the S&P and the Nasdaq are down more, If the Mag 7 takes a bit of a nosedive as well, like we saw earlier this year, and the Russell's down less, but it's still down, we're going to have like markets down broadly if they come back, right? And then Bitcoin's pulled back a little bit off those highs. Bitcoin's making some fresh lows today. We've had a pullback of around 13.5%. So I'd say that's a decent pullback on Bitcoin, to be honest. Oh, Larry, being greedy, I just saw it spike up to 59. Yeah, the zero DT stuff at the end of the day, man, it's very, very slippery. We'll see. Let's have some fun, ride it out here for 2 minutes. Maybe it settles. I'm seeing that the 60 is going to be my filled gamma level, though. This is probably what's going to be the most. I can see this in real time, like late in the day with dynamic trend. You can see where all the order flows are going to pin at the end of the day. So and again, I take a lot of these trades prior to the end of the day. So by the time this all starts moving around these final 5 and 10 minutes, I obviously realize like whether or not I should be taking profit and try to get out usually in that last like 5 or 10 minutes. I rarely take the trades all the way to close, but yeah, when I see being greedy and I see it up to 60 now, it's like, well, you are 10 wide though, right? I think you're 10 wide. Yeah, 10 wide. All right. You got some profit there, man. If you went 55 by 65, you should have a couple bucks. You took that trade for 50 cents. You went 10 wide and took 50 cents. That's a huge profit, man. All right. Let's cheer this trade on for Larry. Let's see if we can all like put our heads together and get this thing going down to 64.55 for the close here. See if Larry can nail it. But I'm seeing this gamble level right at 64.60. That's probably where we're going to be closest to. You can see here the flows at the end of the day. It's just all 64.60. So, but obviously I want to see price stay well below the 64.65 zone for you. Okay. Cash says, I did not catch up gold's move today. That's fair. Janelle, do you have dynamic trends? If you have dynamic trend subscription through me, you have access to this. So if I have a dynamic trends link in my Discord, it's right here. Let me go into Discord for a second into my Chris Pulver trading. If you go into my Discord channel and you go into affiliates and discounts, trading view is right here. So if you go, so this is what I have. I have the quote stream media. This is the feed that I have, and this is my direct link. So you can save about $900 off through my link. And what you'll have in the settings is you'll have the ability to do this. You can set the study, which is my gamma squeeze index. You can set this study at day and short term, which is 0 to 4 day expiration. And you can go ultra short term, which is only 0 DTE. So I have it set on ultra short. And that way I'm focused on where the flows are coming in just for today. I trade daily profit every day, daily profit play alerts every day. I'm looking to see where the market's setting up for today. A lot of these SPX trades I take are today only. So anyway, we settled at 61. Larry, how'd you do? In at 250, out at 670. There you go, man. Okay, 250 on this. Okay, that's still pretty good. So the good thing is you went 10 wide and that cast a wide enough net. I was concerned you went 5 wide because that would have been a loss. But yeah, 10 wide's good, man. Good catch. Scoop it up. Scoop in that butterfly. So Janelle, does that make sense? So you go into your study here for the gamma squeeze index, and when I trade day to day, I go to ultra short term, and that way I can see my 50 and 100% ATRs. I can see my pivot level between the positive, negative gamma. I can see where these things are filling up all day. Okay. So if you have any, feel free to reach out anytime. Like you got questions on this stuff. Okay, Larry, nice work, man. Way to end on a pin at the end of the day. Happy Friday. It's closing bell. The tape is SPX down 0.64, SPY down 0.58, Qs 1.16, Dow down 0.14, Russell down 0.42, VIX up to 15.33. VIX was up 6% today. Dollar was still flat. Oil, not much happened. Natural gas got a little bit of a pop. Oil down to 64. I still have trades on oil with a CL. I need CL to stay above 50, which I think is looking pretty good. I'm up like 30% of my trade right now. Gold, I still like gold. If it breaks higher, I'm going to enjoy the run and the melt up. I still think the bar count needs a pullback. I'm waiting for that pullback before I add more. I do have gold exposure. I have a lot of trades running on gold. They're mostly option trades selling premium. So here is GLD. I have my shares. I don't have anything covered on gold. I'm not trying to cover this. I want price to continue to run. And I did some creative trades. I've got a ratio spread. I've got naked puts. I've got naked puts and ratio spreads comboed. So these are some income trades, but also willing to take some assignment, and then more ratio spreads in here throughout to December. A lot of those I just traded pretty much right at the 200-day moving average. So we'll see what gold ends up doing. But there's GLD. I mean, this is a nice run, man. 1, 2, 3, 4. I was 6 days in a row. That's an impressive stretch on gold. Gold's up 3.8% the last 6 days of trading. Not bad, gold. Not bad at all. But does that change anything on my outlook? Probably not. To be fair, I mean, we had a fake out trade there. We're back to the highs. This does look like a potential, like I said, ascending wedge, and that would be, breaking higher, looking to go higher. If the Fed starts cutting, gold might benefit. But if we have a risk off tone in the markets in September, this is just what I'm trying to ready you for, prepare you for, is I think the markets have to have a pullback. If we have a pullback, the dollar catches a bid, dollar and bonds catch a bid. I think it's a shakeout. I'd still be ready to buy the markets on dips. But going to, gold, if gold pulls back to anything here, 3280, pulls back into 3200, pull back into 3100, I'd still like to take any type of gold trades in here. Simple option trades, bull, call, spread, right? Bull, put, spread. Anything that just lets you benefit from get a good price. Price goes up, you make money. That could be an easy trade. All right. I still like gold. I still like silver a lot. Silver's making some fresh highs. Freaking sweet. Like to see silver going higher. My target on silver is all-time highs. Right up here towards another 20 to 20.5%. Let's go. Let's go to 20+% on silver. That's a big move. And I think that having gold and silver in the portfolio is going to perform pretty well the next probably 12, 24 months. I think gold and silver probably outperform in a big way. I don't know if they're going to outperform equities as a whole, but they'll perform pretty darn well, I would think. I think commodities, I think energy, I think, steel, aluminum, copper, silver, gold, platinum, palladium. Like I am pretty bullish on this like beat down value commodity space that I don't know, could be like a 2000, it could be like a 2008, 2009 rotation all over again. Maybe. But I still like gold and silver. And with the dollar side, like dollar debasement, the Fed cutting rates, adding to the money supply, I think Bitcoin's still a good trade. We just have to see risk appetite stay hungry. If we see risk appetite stay hungry, then Bitcoin will be fine. If we see risk appetite dry up and deteriorate and outflows, you'll see Bitcoin fall a decent amount. It's already down 13%. So much bigger pullback on Bitcoin. Okay. Hopefully that's not a sign of like, oh boy, Bitcoin's down 13%. That means the Qs are going to follow and be down, 6, 7, 8%. But that could also be our precursor. Maybe Bitcoin's a little bit more of a leading indicator. We'll find out. So anyway, and also what happens is a lot of people will fund their, new purchases, or it could be risk off. It's like they get out of risk on and go into risk off, and they'll fund with some of these, gains they've seen in Bitcoin as well. So, all right. I'll let you go. I'm not going too much longer today. We had a long week, a good week, lot of active trading, good classes, good education, master classes, and good profitable trading. So no complaints on my end. I did mention this here in my Telegram. I'll share this link before I go. For anybody watching this, whether you're with me live on a Friday, that's great. You're watching this over the weekend. I just want to make something known here. So this week's August close, which I think we closed up around 3%. So SPX for the month. So August, still a pretty good bullish candle. So August close, just from open to close, August was up 2.86%. Okay. So I can edit this now. I'll put August closing around plus 3%. Gains. It wouldn't be surprised to see September. I'll just read this out. Wouldn't be surprised to see September offer a 3, 5, or even a 10% correction to deliver a contemplative dose of reality in the markets. All that means is it's been a heavy wave of momentum. Buy everything you get your hands on. I think that September is more of a US data reality check. We're going to see that the job market's probably stalling. The US consumer is a little bit overextended and stretched. The US consumer needs a break. The break comes in the form of cutting rates. Then we're going to see what the bond market does to those rates. If the bond market is seeing that bonds are going down because yields are going up, that's a huge warning sign that something is brewing that's going to be unpleasant because nobody wants to see higher yields. And, Trump can be as vocal as he wants to be, but the Fed can only control the short end of the curve. So cutting rates does not mean lower borrowing costs on the 10, 15, 20-year horizons, right? And we don't know if it's going to get worse. We don't know if it's going to get better. I think, and I said this, like, you can go back to a bunch of sessions from January into January this year into like May and June. I mean, April obviously threw a lot of people off guard with the Liberation Day drama, but I traded aggressively through it like I would for any type of crazy market. But I realized that once we started Doge and austerity, and then we had Liberation Day, September was this big deadline. All the cuts that happened during Doge with the federal workers getting laid off, a lot of those are coming due in September. Will we start to see in the non-farm report an uptick in job labor layoffs? Maybe. I think you can still get a job in the US. I think the labor market is still sound and I think it's tight, but it doesn't mean that everyone's just going out and getting the job they want, right? It's been a pretty interesting last 5 years when you can go out and just get a job you want and maybe even consider getting another gig and a side hustle, and you can work and work till you're happy. But I think things are different now. Companies are like, no, you got to come back to the office. We're going to cut down on all the double dipping and triple dipping with 1099s. Maybe, but I don't know. It's really, I think that we're at like this really key level, this really key point where the market's had a great run. I'm expecting the market to maintain a bullish posture, but I think a rattle, a little shakeout, a pullback into here makes some sense. A pullback into here makes some sense. What we don't want to see is a pullback, bounce, pullback, because if it starts to break this level, my concern is that we do the same type of thing again, and then we got to wait for this to give us the signs that, hey, this market's bullish again, right? Because if yields go higher, jobs get worse, and all of a sudden everyone's looking forward to like, oh my gosh, well, consumers are going to stop spending and earnings are going to come down and there are going to be major revisions ahead. All this stuff gets priced in, and it can get nastier faster. So I think that'd be a crazy volatile year in 2025 if we are down peak to trough 20%, bottom to top 30+%, and then back down another 10%. I mean, do we just hit 10% and close there? Do we hit 10 and then try to get back to the highs? Is 2026 more of the same? I'm still eager to buy the dip. I'll say that. I think we're going to buy the dip. I think this is a pro growth, like policy's not shifting in a big way. Trump wants growth. He's probably going to get it. He's basically trying to align the Fed with people that are going to do his bidding, and whether it helps or not, we'll find out. But I hate to say it, but cautiously bullish is a pretty good approach. So waterfall income, good approach. Daily trading, daily profit play, good approach. Define risk, win the day, win the week, swing trade, stay out of the way, give yourself wide margins for error, manage risk, people. Try to manage risk. Okay, that's it. Happy Friday. Have a good weekend. I'll come back and see you on Tuesday. I'm going to do a crypto session on Monday. I'm joining a buddy of mine, Jeff Meyer, on Monday around noon. But I will be taking off this weekend. Enjoy the long weekend. You deserve it. And come back and tackle the markets with me on Tuesday. We'll be live for the daily profit plan for Technical Tuesday. We'll jump in next week. I believe I'm talking double ups and doing more master classes next week on Tuesday for double ups. We'll be talking about the iron fly as well as butterflies. We had a great week this week on pinch point. We had a great week on waterfall with education. We were solid this week, 9 for 9 in daily profit play with a couple of the trades we added in for next Friday's expirations. Took a trade on Crash Insurance Masterclass this week and took a bunch of profits in Project Options Edge. So good stuff. All right. Kindly hit that thumbs up button for me. Subscribe to the channel if you haven't. You can subscribe to me at youtube.com/Chris Pulver and or subscribe to youtube.com/Financial Wars. I'm live every single day, Monday through Friday during the normal trading week. So we're off on Monday for Labor Day. Markets are closed. But Tuesday, Wednesday, Thursday, Friday next week, I'll be back on live 9 a.m. Eastern time for the daily profit play.